All right, good morning, guys. Today is Tuesday, June 17th, and currently seeing what we have. So, price is below most EMAs. So, we're pretty much in a bearish setting. The only EMAs around us that haven't been tested, only EMAs around us that haven't been tested. A market opens in 2 minutes. Um, so, only EMAs that haven't been tested is this 4-hour EMA one. It is getting into a supply zone. However, you can see we have a bullish order block. We also have this EMA2 on the 15-minute time frame. It is still next to a bullish order block, so no need to take any of those. So the only EMAs that would be worth trading here is actually this daily EMA1, which we should have tested. So actually, yeah, we don't have any, I don't see any EMAs here, because all these EMAs, so this 4-hour EMA, it's in a supply zone, but we have a bullish order block. This 15-minute EMA too hasn't been tested, but it's literally next to a bullish order block, so wouldn't take that. This 30-minute EMA 2 is in no man's land. This daily EMA one, it does look like it says it's untested. However, if I go to the daily time frame for US 30, definitely that EMA has been tested. So um, I wouldn't be taking any trade off of it. Um, Regarding SARs, there is an hourly sell SAR here. Uh, Actually, yeah, there is an hourly SAR. Actually, no, wait, let's see. Maybe this hourly SAR here. It's a little tricky. Give me a second. So we do have market open. Let's look at the pre-market highs and lows. So we have today's pre-market high, today's pre-market low. All right, let's go back to these SARs here. I'm curious. This hourly, we have a 30-minute, but this SAR, it's literally next to a bullish order block. So I wouldn't take the sell here. So if anything, I would take this sell here. Let's see how far it is from the order blocks. Yeah, I would take this one. The bullish order blocks are towards like 90% or 80% of the stop loss. So I would take this if it comes here. So the 10-point entry is going to be at 83.1. Nah. No, 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 no. Hourly, 4-hour. 83. Um, Adding an alert there. So we've already touched the hourly sell. So right now we don't want to see a crossover buy. I'm sorry, crossover sell. 10 point. If we get a crossover sell, that will be it. All right. So I'm in the 10-point entry. And I'm waiting for the 5-second entry. All right. So the 5-second entry is about to come in. There it is. And I'm in that trade. I think I got stopped out on the 10-point entry. I may have. I think so. Yeah, I got stopped out. And it was literally slippage. But anyway, it is what it is. So there goes almost full TP on the 5-second entry. Let's see. We should get a push down. All right, there it goes. Come on. We do have some bullish order blocks definitely here. Um, might get taken out. Let's see. If you didn't get slipped out of the 10-point entry, you should still be in the 10-point as well. So for me, unfortunately, the 10-point entry, I literally got slipped out. I think there's a bunch of slippage. Also, I don't think I'll be trading tomorrow. So tomorrow is when we have the FOMC minutes release and the press conference. So the last time I traded that last month, I lost like close to 8,000 in one day. So I think I'll just be taking time off from trading FOMC because it's just taking one day off. So I think today will be my last trading day. Thursday is a holiday. Friday, I'm traveling somewhere. So I think today will be the last trading session here. But yeah, if you guys do choose to trade FOMC, just be careful. And mostly the reason it's not good is because the reason I don't like it, it's because it happens after market opens. So during New York session, you get, and there you go, full TP on the 5-second entry. My stop loss is in profit, it's trailing. Yep, and I'm out of the position. So the 5-second entry, which is our official entry, that's a nice 0.75 gain for the day. Um, that 10-point, man, messed me up. But anyway, so a nice win to kick off the day, 42,370. So this one was the entry here. And this one was an hourly. Um, SCR rejection scalp. It's a nice win there. Let me see. Yeah, and the 10-point loss wasn't even that much. Like I literally only lost like 1,700 when I should have lost like 2,000. So as much as it was a loss, I didn't take too much of a beating on it. But the accounts that I take the 5-second entry all are in profit. Yeah, man, crazy. Um, it is what it is. Let's look for the next opportunity. Mm, so for the EMAs, let's look at, and again, US 30 is bearish. It was below most EMAs, as opposed, well, right now we are starting to push up, but US 30 is, I think it's bearish. Price is below most of these EMAs. And we said here, I don't see any EMA entries unless we get a entry for a buy because the 30-minute EMA too hasn't been tested, but it's in no man's land, so neither in supply nor demand. The next one is the daily EMA, but if you go to the daily time frame, that EMA has definitely been tested. So I think it's just like a bug in the indicator. And also EMAs are always moving. So it is for an EMA to uh for this indicator, like I think it looks at each time frame. So as much as the daily has been tested, it might be looking at the daily EMA maybe from another lower time frame. But anyway, so I wouldn't even trade the daily because it's already been retested. But not to say that we wouldn't get a rejection. Actually, I think at the daily EMA is where we have today's pre-market high. So around there. So there is the pre-market high for the day today. So that might be another opportunity to trade. Let's see, what other account was I doing? Oh, wait, I have other accounts. Um, so this one, man, client, metrics. Sell at 381. All right. Man, I don't know how I got slipped. I'm so close to passing like three challenges of mine, and those are the ones I was copying the 10-point account, and now I have to. Well, if I win one more trade, I should be able to pass them, but that 10-point entry slip messed up my plans. Let's see. All right. So still no entry here for EMA. I'm hoping maybe price comes back down to this pre-market low, either the pre-market low or pre-market high. So I think maybe we might, and actually the pre-market high is all the way up here. So price is actually closer to today's pre-market low than it is to the pre-market high. So I'm hoping maybe we can come back down to this pre-market low and go back up. But you can see we have a bunch of bullish order blocks here. So I don't even, as much as US 30 is below a bunch of bearish EMAs, or a bunch below a bunch of EMAs, you can see we just have bullish momentum here. And also, if you look at this pattern here, you have the typical accumulation, manipulation, distribution. So accumulation, you have ranging yesterday, and then you have a fake out to the downside back into, and we've covered this a bunch of times. I think it's like an ICT concept or something, but yeah, so US 30, I think, will break to the upside. And also we are forming like higher highs and higher lows starting to form. And regarding the SARs that are up here, let's see if we turn on our zones. Okay, so this would be a nice area to sell US 30 here. So if US 30 comes back here, I'll hop into another sell. Actually, no, I won't because we do have this order block. So this order block would be literally like 50% of our stop loss. So, and it's a bullish order block. So it is a red flag. Yeah, so I'm not going to take that sell if it comes up. Yeah, so I'm not going to take this. You can see for this one, this order block, this bullish order block is next to our entry. So if it was a bearish order block, then I would have taken it. So this one is just a red flag, so no need to take that. And again, this definitely is to be expected. Again, tomorrow is FOMC. And as I said before, the last time when I traded, and I can show you, we can go back to my journal. The last time I traded that FOMC day, I lost like 7,000. So tomorrow I'm definitely not trading. If I do choose to trade, I will turn off my copier and just trade with my two main accounts so that if I lose, I don't lose so much. And if I gain, I only gain on my two main accounts. So yeah, but I wouldn't recommend that. So tomorrow I'll look at how market moves. Because yeah, last time I had like those three back-to-back losses on that FOMC day. So yeah, I definitely at the very least won't copy any of my trades to my other accounts. Uh, Here, if we had a supply zone, I really like this 30-minute EMA entry because it's the last valid EMA that we can trade, but there isn't a supply zone up there. So yeah, so today might be back and forth. So other than maybe that one win we got today, I don't know if we are even gonna get any other entry. The other entry we might get is other entry we might get is a buy, which would be good. But even for the buy to happen, because if we turn on the zones here, you can see that we are in a supply zone. So even if we get a 15-minute or 30-minute or hourly EMA entry, ideally we in an area of supply for US 30 here. Let's see. All right, so these are the two trades taken this morning. So this is the 5 second entry account. I had a win on that one. And then this is the 10 point entry account. That's the one that I got slipped in price and price literally came back to take profit. But so between both accounts, break even for the day. Yesterday was a pretty good day. We had two wins. No, yeah, actually, wait. Yesterday we had, oh yeah, on the 5 second entry account, we had a break even day because I remember we had one win and one loss. But on the 10 point entry, had two wins with a 1:2. So yesterday I was up about 8,000, 8,500 for the day. And actually in the afternoon, there was another winning trade that I literally just missed. So yesterday I should have had like 12,000 on this account and 2,000 on this other account. But so days like this, and this is the beauty about the 10 point account. I normally don't really care about hitting stop loss on it because if you're going for a 1:2, and you lose one trade and you win another trade, you're going to get back your loss and you're going to get back more profit on top. So for example, for in this just yesterday alone, 8,800. And if you remember last week, there was this day we had three back to back. I had three back to back losses on the 10 point entry account, so lost 6,000. But you can see I just recouped this $6,000 loss in just two trades. So there was one day last week where, yeah, like 12th of June, on Thursday we had not the best trading day, but you can see just doing the same thing over and over. Eventually, you do recover those particular losses. Yeah. So here for EMAs, nothing. Let's see if we go to the 30-minute time frame. What time is it? It's 9:51. Unless we close above this level. But even if we closed above this level, it wouldn't be a buy because we just have supply zones up there. So I wouldn't even be looking to enter a buy just yet. The other thing to watch out for here, I always say, look at the wicks, and the wicks always tell you a story. So if we look at where this is rejecting from, we are rejecting off of this hourly bullish order block, right? So and you can see we have a big wick at the top. So this was even a break and continuation. So break, closure above, retest, and pushing back up. So anybody who has any confluences for buys on US 30, I think buys are the way to go, especially to achieve that distribution pattern to the upside. Oh, I was looking at gold here. So gold is just in a big range. So gold will probably be in the big range up until tomorrow. Tomorrow's FOMC. Give me a second here. Okay. So there is SAR entries here, but again, the red flag is that we have a bullish order block literally at that entry. So we have a 15-minute bullish order block. We do have a 4-hour order block up here. See, this is 0919. Add alert. Let's see something here. We do have a 4-hour bearish order block there. So if anything, the rejection may happen here. Let's see. Let's see if there is a. Let's see if there's a crossover. If there's a crossover sell. Since we have a 4-hour bearish order block above there, if we don't get a crossover sell, which I think we will for this candle, yeah, there it is. So yeah, we formed that crossover sell. I was willing to take this trade because as much as we have this order block, 4-hour order block, no, 15-minute bullish order block laying next to the entry, we have a 4-hour bearish order block. So the 4-hour supersedes the 15-minute. And also this one was a 4-hour zone. So at the very least, we would have had a rejection here. But anyway, so the rejection happened before price got to the 10-point entry. So I'm not looking to take that anymore. So the SAR, we have a retest of, wait, we have a retest of the 15-minute EMA, but we are in a supply zone. So nothing here. We have a hourly EMA here that's down here that hasn't been tested because I think we just closed the hourly time frame. So, okay, so this hourly time frame or this hourly EMA is in no man's land on the 15-minute time frame. However, if we go to the hourly time frame, if there is a demand zone next to that EMA, I will be looking to take a buy. So if I turn on the zones and we are in a green zone here, I will be looking to take that entry. Okay, perfect. So I'll look to take the hourly buy. I'll look to take a buy on US 30 on the retest of the hourly EMA. Also, we do have a we do have we are inside an hourly order block. So we are inside we are inside the hourly bullish high and low order block. So I'll look to take a buy on US 30 if we come back down here. So 10 points from this area is 327, 317.3. And I think we might come back into the range. So I'll be looking to take this trade here. I don't know if price will come back down here. Um, And we might also form a 15-minute SAR. So if that comes as well, that's another one we might look for. Um, Also yesterday's trade, um, the one we were waiting on, or the one that we were in. If you guys remember, we took a sell on US 30 up here. So that trade ended up, so for me, luckily, I didn't get tapped into break even. I had a terrible entry, so that's why I was, even though price had hit TP on the live session, like I was still in it. But we sold price, because yeah, this one was 10 a.m. yesterday. We sold up here, and US 30 ended up dropping like 500 points for that particular day. So another thing to note, if we are ever in a trade, so normally for these rejection scalps, they should hit in like under a minute. But if we are like sometimes 2, 3 minutes, but if we are in a trade back and forth for over 10 minutes, one thing you can do is write price further down. So for yesterday, and I actually thought about it, writing price for like 100 points. But if we are ever in a rejection scalp and you see we are back and forth for like 10, 15 minutes, because 20 points is so little for US 30, like that should ideally get taken out almost instantaneously. But if we are ever in a trade and price is riding back and forth for like 10, 15 minutes, kind of think of going for a bigger move, because now when the move starts happening, and it's not the first time it's happened. So like this whole move yesterday, we sold at the top here, and then we had like a 500 point drop. But you can just go for like 100 points, which would have been just something like there. So 100 points is what I would say target, and don't target like 500 or whatnot. But 100 points, normally that happens, or sometimes 200 points if you want to stretch. But yeah, so if we are ever in a rejection scalp and 10 minutes, 15 minutes, we haven't hit TP or stop loss, you can kind of think about going for a larger move than that. So eventually we got to that 10-point part here, but unfortunately we had already formed a crossover sell. But if not, that's where I would have taken the sell here for 419, and also would have taken the 5-second entry here. But that trade already got invalidated by the formation of a crossover sell. And actually, let me see this here. Mm-mm. Yeah, yeah. For those of you who trade Bitcoin, Monday's pre-market low has not been tested. This will be a nice balance area for BTC, I think. Yep, this will be a nice, and it's next to a daily bullish order block. So this 105, I haven't traded BTC. I have a terrible win rate with BTC, so I stopped trading BTC, I think last year. But 105, it just has like a lot of break evens, and I don't like that. But 105,000 is a good, 104,500 is a good buying area for. So from 104,000 is a good buying area for BTC for those of you who trade or who still trade crypto. So we already tested Monday's pre-market high. So yesterday's pre-market high, we've already tested it. There's a check mark next to it. So the only one that I would be willing to trade is today's pre-market high. So this one would be a very good trade because we do have some order blocks there, some bearish order blocks, and we are in an area of, actually it's inner supply. So it's like a supply zone within 3 supply zones. So this would be a good one. if we can get up there before the live session is over. 37. And look at that. So remember when I was talking about what the wicks show, right? If we look at this, the wick is rejecting from an hourly bullish order block. So if you guys remember when I was drawing this pattern, like always look at what the wick is telling you or what the wicks are telling you. So we came back down, rejected off of the 15-minute EMA one, rejected off of an hourly bullish high, closed as a nice bullish candle here, closed above the 4-hour bullish high, did the same thing, picked up liquidity from that order block, and then kept pushing up. We might form a 15-minute. Might form a 15-minute SAR someplace here.
So, two things. For the New York lunch session, what's the time? The EST time.
Honestly, I don't know. I do not know. I haven't traded London in forever. And the daylight savings time keeps changing. So I, I don't know. I,
Yeah.
I just know at some point London used to happen at 3 a.m. Eastern time. I don't know if that's the case, to be honest with
No,
you.
no,
So
no.
you'd have
No, I'm in the New York AM and the lunch session. That, or is there like a website, like where it says it? Because like when you go on, you won't say like exactly where it is. The New York session, like generally, starts at 9:30, like the whole.
Mhm.
So I was saying, the AM session of New York and the lunch session and the New York PM session, like the time, because it isn't English.
Mhm.
Mm. Like you said, it does change. So where do we find that? That's what I'm trying to.
Wait, where do we find the overlap?
No, no, no. Like the New York AM session, like this. You get what I'm trying to.
Sort
So what I
of.
mean,
Mhm.
so what I mean is, when New York session starts, is when it starts. That's the AM session. That's the big. That's what
Mhm.
I'm. Yeah, and the beginning, and then the lunch session, which is basically New York, but it's in the middle, and then New York PM session. That's what I'm trying to. What the timing, when it starts and when it ends,
Uh,
because then.
well, I mean, you'd have to do the math on that because I don't know. Or, to be honest, I'm not. I wouldn't know the London times. Like the question is, what
No, no,
time
no,
is?
yeah, I'm in an EST. Then I would just think that UK time.
I mean, I'm sort of getting what you mean. I just don't know if I have an answer for you.
Oh, I'm in like timing. It's not like I don't mean like any. Uh, because New York starts at 9:30. You know,
Mm-hmm.
what's it called? America. So let me see. Uh, so New York starts 9:30, and then you said no. What's it? And then at 11 was it? At 11 a.m.
Wait, wait, give me a second.
Yeah.
See if I can change this. All right, could you try again?
Yes. You said 9:30 it opens, and at the session like in and then and then you said what's it called? At 11, what happens at 11? Is that the end
No, 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 no,
of the
no.
morning session?
I just stopped trading at 11.
Oh, oh, oh. So at 9:30, that's the New York Open. And then
Mm-hmm.
when does the what's it, so if it opens at 9:30, when does the AM session fit, basically, of New York AM? You see what?
When does the AM session end?
Yeah, of New York.
Uh,
Because,
well, 11:59. I mean, it's the only reason I don't have a particular reason why I stopped trading. It's just I don't like being in front of the charts, and also after 11, you just have for me, rejection scalps, I need liquidity in the market. That is the only reason. So it doesn't mean that you can't win after 11. You can, but also I don't like being,
yeah.
because for this rejection scalps, you have to literally be in front of the charts to take. So if you're asking when the AM session ends, the AM session definitely ends at 11:59 a.m. before noon.
Oh, yeah. So then that means the lunch session is, I think, from 12. or 12:15, something like
Again, I don't know. The one thing I remember, and this was from reading Baby Pips way back, London session used to close at noon of New York session. Again, that depends on the daylight savings time. It depends. So the question is, most markets close at 4, I think 5 p.m. Eastern time. So the question is, what is New York Eastern time when London is 5 p.m.? So that's how you do that math. So at when London is 5 p.m., what time is New York at that time? So that will give you the time when the overlap between London and New York happens. But other than that, it's like you'd have to do those calculations. But for me, it's a preference thing. So I don't I only say for me I trade between 9:30 and 11. I trade from 1:30 to 3. That is my own thing. It doesn't mean that that's the only time people can trade. And it doesn't mean that I'm only trading actually I only trade for 1.5 hours. The AM session, if you actually do the math, is so 9:30, 10:30, 11:30. So the AM session is about 2.5 hours. So during the AM session of New York Open, I only trade 1.5 hours. I don't trade the remaining hour of the AM session, or I don't trade the last hour of New York
yeah.
AM session.
And then in the PM session when you trade, like in the afternoon, what's that like in America? Like that.
So it's
That one.
1:30 p.m. to 3 p.m. Eastern time.
So that's in America. I mean, check that in London. You said 1:30.
Yep, 1:30 to 3 p.m. Eastern time.
Okay, so 1:30 p.m. EST to London, the UK is basically 6:30 p.m. So 6:30 p.m. and then you finish at 3 p.m. EST. So okay.
Wait, if you said something, you may have to repeat. I'm having some audio issues.
So basically, the New York PM session in America is basically 6:30 p.m. UK, and then it ends 3 p.m. EST. So that's 6:30 p.m. London. It starts and then it finishes at 8.
Mhm.
Mm. So that means okay. So that means in between what you said, that 11:59. So I think from 12 to 1:30 EST is the lunch hour. Yeah, because I was looking at it, and some people were saying 12:15, 12:30.
Yes, it is.
I
It
think
is the
that's
lunch hour. I mean, which is my premise for not trading. So the reason I don't trade is because those times when I'm not trading is when people in New York are going for lunch. All the stockbrokers, hedge funds, whatever. So they're normally at lunchtime, and normally the market is just ranging.
yeah.
So that is the one of the reasons that I don't trade during lunch hour.
Oh yeah, you know why I was saying the lunch hour? Basically, I was seeing one guy. What he does is, you know how you do the SAR and injection and stuff. The way he does it is, you know, the lunch hour, that 1 hour from 12 to 1:30. So whatever happens in uh within that time, in the next session, in the New York PM session, they look for the sweep of the high or low of the lunch hour. You see what? They won't trade the lunch hour. I get what you're saying. why people don't trade the lunch. But you see, like whatever price does they look at it in the PM set. You see what I'm trying to ask me about the lunch. So that's why they call it the lunch. Kind of obvious. No,
Yeah. Yeah, I can see that. I mean, yeah, there's definitely a bunch of ways to do it, but yeah, I mean, I guess so.
yeah, yeah, that's what I was trying to see why they were saying or why that hour is important. But I think you're right when you're saying you should, but why you don't trade that lunch hour, basically. What's it? So basically, every day you would trade from 9:30 a.m. to 11 and 11 a.m. And then you won't trade the last hour of the morning, and then you will wait till 1:30 p.m. basically to trade.
Yeah, Monday through Thursday is the only time I trade morning and afternoon. On Friday, I don't trade the afternoon. Again, it's for me, it's a probability game. In the afternoon, New York
Yeah.
is the only market that's open. So do I really want to gamble with that? And by Friday, I've already made most of my profits. So yeah, and I don't even feel like trading. So Friday is the only day that I won't trade the afternoon session.
Oh yeah, you were saying you would have said that. Yeah. So Friday you won't do it, but Monday to Thursday usually you do. But Friday,
Mhm.
mm, okay.
And probably for tomorrow, I'll not be, most likely I won't be trading FOMC. I wouldn't be trading a FOMC day that has a press conference. It's just
Oh
so
yeah,
much.
tomorrow. Mm,
So I think those would be my only times that I won't be trading, and of course holidays. So Thursday is a holiday, so of course no liquidity in the market.
mm.
Let me see, is it actually a bank holiday? Let me see. It should be. Yeah, it should be a
Oh yeah,
USB holiday. So yeah, so Thursday nothing. So holidays nothing. Tomorrow we'll see. Tomorrow, worst case tomorrow I'll just turn off my trade copier. But yeah, I lost quite a bunch of money with the last FOMC. So.
yes. But the thing is, you know how let's just say this will, it's not like thing. Let's say for example, one day, this is the thing I'm trying to. So let's say one day you just take a loss. Let's just say you're down, and obviously that's normal. But let's just say you're, what on your accounts. Then let's just say the next day or the next session you miss the trade or you miss the entry, or whatever, and then you wait for the next. But let's just say the next day you take a trade and you lose again, and now you're down. I'm just saying, for example, you see what I'm trying to.
Mhm.
So what I mean, let's say for example today you lost. Let's just say in the AM session, like right now, you took losses, whatever you, and then let's just say in the PM session. you miss the entry or you lose it. Just for example, is that possible? Let's just say consecutively lose trade in the
I mean,
with
you guys still we have three back-to-back losses on the live session.
yeah,
I
yeah, no,
mean,
no, yeah, yeah. I know what you're trying to say. What I mean, in the same day, you remember you said your max total loss for the day. What was it again? Was it 3%?
mhm.
Yeah. So let's just say they and then you cut it off. Let's just say that happened, and then the next day the same thing happens, or the next session the same thing. Okay, not this next session because you're taking the max daily loss, but let's just say the next day you came back and the same thing happened. For example, I'm not saying it's gonna happen because it hasn't happened yet. If it does, yeah, what would you do? You see what I'm trying to
So what, I mean, you tell me, what can you do? Are you gonna stop trading? Because
No,
honestly,
no,
I
no.
don't like I don't like that question because you shouldn't even I to be honest, I don't like that question because it's trading. You don't know, nobody knows the future. You're gonna lose. I've lost,
Mm,
three back-to-back trades on the live session. I haven't lost three back-to-back trades 2 days in a row, but
mm,
so long as I'm coming out here and trading, I don't care about losing. It's like, you know, so long. Okay, why not ask me the question? What if you have three back-to-back wins today, and then you have three back-to-back wins tomorrow? What are you gonna do? It's the same question. So why would you be fixated on, oh, what if you have three back-to-back losses today? What if you have three back-to-back losses tomorrow? It's nothing I can do. If I end up, I haven't blown an account in 2 years. If I end up blowing an account, then that's fine. It's like I know for all these strategies, I'm making close to $50,000 a month. So if I end up having three back to back, okay, let's even do the math. I end up having three back to back losses today. I have three back to back losses tomorrow. I'm only down 6%. The max drawdown is 10%. Let's even say I have three back to back losses the next day. Guess what? I still won't have blown my account. Now, with my back testing, that, I don't have, even if we go to my journal, I don't have like nine back-to-back losses. But if that does happen, out of making $10,000 on one account and just losing what, 500, 600 a month or in 1 month, like the risk to reward is so much in my favor that the only way I can lose is if I keep blowing account after account. So for me, I don't care. Like if I lose, then I lose. And in any case, my answer to you is I ask myself, why did I lose? Did I follow my confluences? Yes. Did I set a stop loss? Yes. Did I over leverage? No. So if I'm losing based off of the same setups that make me win, I really honestly I don't care. So for me, if you can think of what if you lose 2 days back to back in a row, you can also think of what if you win two back to back. And the best example is this that I gave here. Last Thursday on my 10 points account, I literally have had three back to back losses. I lost 6,400 for that day. I stopped trading after my third loss. Was I, okay, it wasn't the best day. Even my 5 second account, I had one loss. So 8,000 combined loss for the day for both accounts. And actually, since I actually have like 1.2 million in funding. So if you actually do the math on this particular day, I think for the 10 point account, I'm copying this on maybe five accounts. So on this particular day, I lost 30,000. I'm copying because this is a 200K account. I have five more 200K accounts. So on this particular day, I lost $30,000. But it's like I don't care. The next day, guess what? So this one was 612, 612, 6. So 612 was that Thursday. We didn't trade on 613. I didn't have any trades. Guess what? I came back and traded yesterday. So yesterday had one win on the. Actually, no. This is, the end of day yesterday was this one. So 8,800. So the losses that I made on Thursday, I got back with two trades. So yesterday I actually made about 40,000 on my 200K account. So I actually made 10,000 more than the loss. So for me, I don't care. It's like, honestly, I'm out of the mentality of caring about losses. So the only day that I will ever care that I've lost is if like I entered a trade and then I didn't take a stop loss and then I end up blowing my account. That is the day that I'll beat myself up. But just a regular loss, it's like, no. like the amount of money I'm making in a day or in a month is actually, if you guys have been on my live session since I started, this is the most amount of money I've ever made over the last 3 years. So it's like, am I really gonna worry about a loss knowing that I can get it back? No. So for me, and that is just where I am as a trader, is like I don't care. Even if I have three back-to-back losses until I blow my account, I'm fine with that. The best I can do is like go back and see, is my strategy still valid? Are my entries still valid? And again, this rejection scalp is not like I started doing it yesterday. I started doing it March. I did back testing the whole of February. So I have data for February, March, April, May, and June. So the more that I keep trading, I'm establishing more metrics that I can go back to my journal and see, okay, what, and actually right now, even let's even do that. Let's go into the journal and see the simulation for the most back-to-back losses I can have.
The reason why I'm asking that is because that strategy. I wanna not now, but later, because you know how you said on a 200K, how you obviously eventually scale up with this strategy much faster. I know you said you should ever over like you should backtest it yourself or whatever, but because you're clearly backtesting there, what's this? You're journaling it, yeah, that's it. You're recording. I think from this, I think eventually start to track. You know what I'm trying to say?
Yeah, and so long as you journal, like journal, the reason that I love this is like, okay, so let's do this for this first simulation, right? Longest winning streak, nine back-to-back wins. Last week I actually had seven back-to-back wins for the 5 second entry account. Now, this is the 10 point entry account. So if we look at it, longest winning streak, nine. Longest losing streak, 10. So if you have, so I've never had a daily, because the other thing that this I consider is that I take every valid and see. So the fact that I'm also taking myself as three back-to-back, it kind of gives me the time to reset and the market to reset. Because still, if I have three back-to-back losses in the AM set for any account, I am not able
Oh, bro, the mic is going down. I don't know. I think it's up.
if I three back-to-back losses in the AM, I do not take.
No, still not clear. Still not clear.
I don't know.
It's like your voice is like literally buffering.
All right, so
Yeah,
yeah,
yeah, okay.
today I just have a bunch of audio
Yeah,
issues. But see, for this particular one, it says longest losing streak 10, 10 back-to-back losses. But what it doesn't account for is my own safeguard, such that if I have three back-to-back losses, like in the AM session, I even close out that account. Even though I come back and trade in the afternoon, I can only trade the afternoon session with an account that doesn't have three back-to-back losses. So for example, that example I just gave you guys for last Thursday, for the 10 point account, I ended up with three back-to-back losses in the AM session. So I actually did not trade that account in the PM session. In the PM session, wait, if we look at this, I don't even know if I had any trades in the PM session for the 5 second entry. Yeah, so I didn't. So for the AM session on the 10 point entry account, I was done. I was done trading. In the PM session, I was willing to trade the 5 second entry account because in the AM session, the 5 second entry account only had two back-to-back losses. It did not have three. So I was willing to take a trade on the afternoon session with only the 5 second account because I still had about 1% or 0.5% left. So what this doesn't, what these statistics here for the losing streak don't account for is that part. So, will there be days that I have three back-to-back losses? Definitely. We've seen two of those days on the live session. But will there be days where I have 2 days where I have three back-to-back losses? Probably, it is probable, but giving myself those that limit of three trades back to back, maybe I would say maybe it's a 5% chance or maybe a 10% chance that I'll have 2 days, but we'll see. Like as we keep doing these sessions, we'll see whether we get that. But let's even assume one day I have 10 back to back losses, which is to mean I end up blowing an account, which is fine. A 200K account, I only pay what about, I think a 200K account nowadays is between 700 to 800. So I end up blowing that account. But look at the gain max or the gain for a 200K account. If I keep using these strategies, it's 400K. So compare 400,000 gain to losing $800. It's like it's right. It doesn't make sense in the grand scheme of things.
Actually, yeah, that's why I was saying. I know, like, because you're showing it every, like, I know, like you said, like, you should just get the strategy, like the strategies that you're doing to just get it eventually. But what I want to do is, I just want to see how well you do. You know what I'm trying to say? Like, if you know what I'm trying to. I know, like, he's doing very well, but I just want to see over the like what it can really be. And then I'm just gonna get a new 200K. Try
Wait, you said over what period?
like over this year. You know what I'm trying to. Like 2025.
I mean, you have that. I mean, you already have that. You have me from 20. If you go on the Discord, you have access to this spreadsheet. Like this was 2023, 2024, 2025. There is actually, if you traded live with me from 2023, you would have never blown your account because even here, any particular month, you would have never blown because I say for the 10-point account, for the 10-point entry, it's up to you guys to figure out whether you're going to enter that trade with me. That is fine. But I don't even count the statistics for the 10-point entry account, which are even more than the 5-second entry account. The 5-second entry model is safer. You go for a 1:1 risk to reward. And based off of how I enter, the probabilities for that hitting are pretty high. So at no given time, since 2023, since I started live streaming, there is no particular moment you would have ever blown an account with me because when we started in 2023, um, there was no losing month. Actually, I don't even know. So only November with a loss of 2%. So if you carried that over to 2024, you'd have got back your 2% in April. So you'd have gotten back in profit like 3%. June had a loss of minus 1.8. uh, July, August, September minus 1.5. And then you come to 2025. 2025 started off slow because we started off with the SAR levels rejection. And then beginning last month, that's when I started doing the rejection scalps as the official trades. And if you just look at that, 6% in May, 0.75% in March. April was, I think, minus 0.75. May, 6%. June, 4.5%. So literally, if you took, and I don't even count the trades I take when I'm not on the live session. I only count in this spreadsheet, it's only the trades I'll say I'm taking it on the 5-second entry account, on the 5-second setup. So this trades, if you literally go on each day of this, go to my YouTube, go to the live session, you'll see the trades. These were actual trades that were taken. So I get what you're saying, like wait for a year, that's fine. But
Basically, I think
I don't see why somebody wouldn't even be taking any trades I take on the live session. Like you would literally, with a 0.75% risk, and for me, like anytime, and for you guys, I don't even let you guys hit three back-to-back losses. Like as soon as we have two back-to-back losses, I don't even take a trade on the live session with you guys. Like I actually end the live stream because I really don't want to push you guys to start having like 0.75 times 3 is like 2.1% loss in a day. So anytime we've had like on Thursday here, I actually ended the live session early because we had the two back-to-back losses. I really didn't want you guys to take a third loss. Same day, I think, yeah, the previous month we had two back-to-back losses. But the next day, guess what? We ended up getting that back. And then the next week we had two more actually two back-to-back wins on this Tuesday, two back-to-back wins on this Tuesday. So yeah, so I try my best to make sure that I show you guys like when a trade is risky. And I'm not like other streamers or other, live traders who will mark up a trade and they're not taking it. As soon as you see me put this on the 5 second time frame, I put it where the 10-second entry is, and then I put the 5 second entry where it is. I don't put this long and short tools when I'm not taking the trade. And if I put them and then the trade gets invalidated, like what happened today, I will literally tell you guys I'm deleting these markups and that is it. So for me, it's like I don't, especially now that I have this crazy wins with the rejection scalps, I don't see why you shouldn't even take a challenge for it. It doesn't have to be 300,000. It can be a 10,000 challenge. And like literally I told you guys like today, if not for getting slipped out of the trade for that 10 point account, I was gonna pass three challenges. And I started them like last week. And all I'm doing is taking the same trades I'm taking. Now the challenges I'm taking with the 5 second entry account, those are gonna take me longer to pass because you can see even by this chart alone, it's probably gonna take me like maybe, and I'm risking 1% per trade compared to the 0.75 markup. So like phase one, if I'm taking the 5 second entry account, it's gonna take me like maybe a month or 3 weeks to pass phase one and maybe 2 weeks to pass phase two. But on the 10 point challenges, it's taken me, I'm looking at one right here that I'm doing with E8. I started on Monday, June 2nd. So today I would have passed phase one if I won, if that trade wouldn't have been slipped. But so with the 10 point entry account, I'm taking like 2 weeks. And this week, this month has been a little slow. So I'm taking like 2 or 3 weeks to pass phase one with the 10 point entry account. So if you guys will take challenges with me, just make sure if you want to risk 1% per trade like I do, make sure that you're able to cap yourself out at 3% loss for the day. Because if you do not, and there's elements of say revenge trading and all, then you definitely that will blow your account or you won't have like the same result. So for me, if you ask me if I was myself looking at me trade, I would tell you guys don't take the 10 point entry with me. Take the 5 second entry with me. Get a 100K challenge, get a 50K challenge. Use it. Give yourself like 2 months to pass phase one, phase two, or even phase three if you are doing three phases. Get funded with me. If you get funded with me, you're probably making what you can see if you want to steal. And for me, like I don't lower my risk if I go to a live account. So I risk 1% during my challenge phase. I risk 1% during my funded phase. So if you keep risking 0.75%, you can easily make 6% with me a month, or even at least 3%. Like there's no need. Like right now in the month of June, risking 0.75 on a 100K account, you'd have had 4,500 in profit. So at that point, if you're like, okay, I'm done trading for the month, then you're good. But I would suggest, get a 50K challenge with me, get a 100K challenge, take the 5 second entry trades that I take. Give yourself 1 to 2 months to trade, get funded. Once you get funded, work yourself to a payout, maybe 3% or 4%, and then use that payout to get a bigger challenge. And then, or get a payout, get two challenges, get two 200K accounts. Um, Use one account to enter the 10 point entry when I enter the 10 point, and use the other challenge to continue doing the 5 second entries. And then you can find prop firms that allow you to copy. That's what I've been doing, this whole time. I have like I have like I think I have 10 accounts. I have 10 accounts that are prop firm. Out of those 10 accounts, five of them are challenges, five of them are funded, and then I have five accounts that are personal accounts of mine. And that's what I do. And if you do the math, the grand scheme of things is like, so yesterday's like 8,000 on one account, multiply that across five accounts that are challenged, five accounts that are funded. So, 40K on the challenges and about 30-ish K yesterday no, 40K on the funded and about 30 to 40K on the challenges or vice versa, depending on what I said. But yeah.
Yeah, there's so many things. But the crazy things, obviously, well, first the thing, what's it called? You know how these are the only two uh, scalps that you use, strategies, sorry, rejection. Yeah, SAR rejection and the EMA rejection.
And the
That's it.
pre-market high and low.
The pre-market high and low, is that part of these?
Yeah. It just doesn't come off frequently. Sometimes these pre-market highs and lows will come up after the live session has ended. So even for me, like unless a trade comes between those two sets of times that I trade, I don't take it. So most of the times these pre-market highs and lows will get hit either during that 11 p.m. to 1:30 p.m., or sometimes they'll get hit the next day during London session. So the pre-market highs and lows, they're so. So a good amount of times we won't get them during the live session. But yeah, so also for them, they're also part of this strategy. So if we go to like this 10-point account and I go here, you can see the pre-market rejection scalp has only given me $2,500. So I've taken 10 trades with it, won four, lost six. So it's only given me like 2,500 compared to, so the SAR and EMA ones definitely give more.
Yes. What I want to say is this. So the reason why I was saying, you remember how I was telling you, yeah, I was gonna, well, before I do the challenge. The thing is, what I'm trying to see, how on your on the trade on the how you put the text, the text where it says exactly what to look for, like step one, step two. Do you get what I'm trying to say?
Mm-hmm. Mm-hmm.
When I look at certain strategies, when I take some trades of mine, I put like step one, what to look for, like with the
Right.
SAR rejection stuff and the EMA rejection, is there something like that you wrote? Step one, look for this, step two, so that you memorize it and then it's in your brain. Because like on the chart, obviously you know what to look for because you've been doing it for time. But when I look at the chart as of right now, I don't even though you've been doing it for I don't know how many months now, since
I
March.
mean, I've always
I haven't
done
memorized.
I've always had this, and I put it in the Discord. So it's literally it doesn't it's the same three confluences that they're not even specific to the rejection scalps. These are specific to, and this one I created even just for the SAR itself. Like you're just looking for rejection,
Oh yeah,
or
that's the.
yeah, so it's just three.
Oh, so okay. So basically, for the SAR, this is the three steps.
No, for everything that I trade, it doesn't matter whether it's SAR, whether it's CMA, whether it's so this doesn't matter. Like this is relative. So put in EMA here, put in pre-market highs and lows. Like the rejection scalp is the same. The confluences of the rejection scalp are the same if I'm trading any other strategy of mine. So these confluences are universal for me. So it doesn't matter whether it's a rejection scalp. It doesn't matter whether it's a swing trade. These are same. So it's pretty much just what is the trigger? So the trigger is what's gonna be either a rejection of a SAR, EMA, or pre-market high and low. So that's step one because that's what you're looking for. That is your trigger. Step two, just same thing. If you're buying, make sure you're in a supply zone. No, if you're buying, make sure you're in a demand zone. If you're selling, make sure you're in a supply zone. If you're looking for a buy and you have a supply zone, then automatically don't even go to the next step. Like wait for a setup that lines up with that. And then the third one, if you're buying, make sure there's no bearish order block around your entry. If you're selling, make sure there's no bullish order block, and that's it.
Uh, so basically, this is for the SAR rejection scalp. What about
Nope, it's
and you
for
know
everything. It's for everything,
so
not just the
so for the
SAR.
okay, so for the EMA, what would be the difference? Because there's an EMA. You said you got. I'm trying
Uh,
to. What I mean is basically, for the SAR one, how you just showed it. For the EMA one, wouldn't you
it's
look
no,
for like
it's the same. That's what I'm saying. Take off. Actually, I need to edit this out. It's not specific for SAR. So here, how about I do this? It's the same thing. Pre-market. So that's it. It's these confluences are just not for the SCR reject. They are for every
oh,
strategy I've ever had. So
oh,
the first part is just the trigger because
okay,
the first part is just the trigger of what you're looking for. Are you looking for an SCR? Are you looking for an EMA? Because if I'm looking for an SAR, I wouldn't be on the left. No, if I'm looking for an SAR entry, I wouldn't be on the EMA chart. So I wouldn't be on this chart to my right, if that makes sense, right?
okay, I see, I see.
So if I'm looking for an SAR entry, then I'm on the chart to my left, and all I'm looking for is my SARs, which are here, right? If I'm looking for an EMA entry, I wouldn't be on the SAR chart. I would be on the EMA chart, and then I look at my EMAs here. I look at which EMAs have not been retested, and then I go ahead and wait for price to get there. Same thing. If I'm looking for a pre-market rejection scalp, I wouldn't be on the SAR chart. I wouldn't. So I have three separate charts for each strategy, if that
Okay.
makes sense.
Oh, and then how you just said the retest. So the SAR, for example, or the EMA
Mm-hmm.
or the pre-mark, how you just said there should be no retest. So that means there should be absolutely the price should not have gone there at all, not even one.
Mm-hmm. Mm-hmm.
So that's how you would look at it. That's what
Yep.
you mean by the first.
Yep. That's
Okay,
yeah.
so
It's the yep.
okay, um, so mm, yeah, so okay, so on the second chart, so the SAR chart you look
Mm-hmm.
for. Uh, okay, so just so I remember as a pro, what was it exactly? Just on all three. I need to look at pro.
Wait, you say what exactly?
Like the first step on all three. Can you just do it one more time, just so yeah,
Mm-hmm. You say what are you looking for?
yeah, yeah. Like the first on each chart, basically. I'm trying to.
So, all right. And you can take this to be whatever it is. So this is the same. Again, it's not specific to one. If you hear me say SAR, is because I'm just used to SAR.
Yeah, yeah.
So this can
You mean
be
all the three?
EMA, this can be EMA, this can be an EMA, this can be a pre-market high. It can be, so this can be an SAR, EMA, or pre-market high. This can be an SAR, EMA, or pre-market low. And actually, let me type that in. And it's already 11 and I need to drop off, but give me one
Oh,
second.
we can
ESA.
do it from.
No, that's fine.
You
That's
can
fine.
do it from.
I have some few moments. So the top one can be an SAR, can be an EMA, or a pre-market high. The bottom one cannot be a pre-market high because you would only be looking to buy at the bottom. So the bottom one can either be an SAR, an EMA, or pre-market low. So the whole premise of a rejection scalp is that when price gets to any of these areas, a rejection is going to happen. So there's two kinds of rejections that can happen. The first one, price will test that level exactly and reject back down. The second one, price will go up and reject back down.
Okay.
Wait. The first one, price can get there, reject back down. The second kind of rejection is that price will go past it, reject back down. The third one, which is the unfortunate one, is that price will keep going and going up. All right. So same thing to the downside. Price can come and reject from there. Price can come past it and reject back. Price, unfortunately, can come and go away from it. So you can trade model one. So model one is when price rejects exactly from that level. You can set your pending sell at that level, or you can set your pending buy exactly at that level. So that's the first way you can, and your job for a rejection scalp is that you are trying to trade the rejection. That is it. You're not waiting for the candle to close. The only strategy, anything but the rejection scalps, the previous strategies, you needed price to close above or below an EMA. But
Oh,
since
yeah.
you're only taking a scalp, you do not want to wait for the candle to close. Your anticipation is that when price gets there, you are trading that rejection. You don't want to wait for price to close, for the candle to close. Does that make sense?
So, yeah. So what you're saying is when the candle or price goes to that level, as soon as it hits it or touches it or tests, you enter.
Yes, you can do that. That is model one. So you enter as soon as price touches that. Now, for
Oh,
me, I don't use model one. Why don't I use model one? It's the same thing as if you have gold getting to a price point of 3,000. A lot of people are trying to sell at 3,000. Most likely, mostly for gold, if price gets to those psychological levels, gold will go $20 past that level before it even comes back
oh,
down.
yeah.
Because the reason for that is that there's a lot of liquidity building at that spot. So
Mm.
you have a lot of people that are trying to sell at those critical areas, at those EMAs, or to sell or buy. So let me put it this way. There are a lot of people who have orders, whether it's buy orders or sell orders at those critical price points, psychological levels, or supply zones or resistance zones. So there's a bunch of that. So for me, I don't want to trade like everybody else. So what do? I give myself a threshold. So I want price to come to manipulate past that level by 10 points for US 30, $1 for gold, even though even back testing that one for gold, I think you might need $1.50 at the very least, or $2. But for me, I wait for price to manipulate past that level, and then I enter 10 points past that level, and I write the rejection down. Same thing. Here, I wait for 10 points on US 30, $1.50 or $2 for gold. So for me, I actually use model 2 to enter. Now,
Okay. So okay, I
mhm,
see what you're saying. What you're saying is, so what you do is, as soon as price tests or hits the area, or whether it's the SAR, the EMA, or whatever, what you do is you don't enter straight away like the first one. What you do is you wait for a 10-point move in the same direction before you enter.
correct.
Is that what you're saying?
Yep.
Okay, I see what you mean. So okay. So okay, but for the 5-second entry, would you do the same thing? Would you wait for ten
No,
point
so
move?
the 5-second entry has its own entry. So the
Okay,
10
okay, okay.
point, the 10 point, it has to satisfy. So for me to even think of entering, I number 2 and 3 have to be satisfied. So before I even find where my 10 point is, I have to make sure if I'm selling, I'm in a supply zone. If I'm buying, I'm in a demand zone
Oh
before
yeah,
I even do this markup.
oh yeah. One thing, the how you just said the 10-second entry, how you wait for the 10 move in the same direction. In the step one, step two, step three, like the confidence. Like I'm just saying, just to make it more clear, so we eventually memorize it. It's not, like as of right now, it's not in. You know what I'm trying to.
Hmm.
Yeah, that's what I'm just trying to say. If you put it in there, it's
Yeah. So the 10 point, so long as confluences 1, 2, and 3 have been met, I enter on impulse. Literally there, when price gets there, I click sell. You can put a pending order. Sometimes price, that push to the 10 point happens so fast. So if you're quick enough to put a pending order, well and good. If not, for me, I market execute.
Wait,
Sometimes,
1 second, sorry. What was it again? I just get.
so
What
long
do you
as
do?
price, like you enter, so you always see me set an alert there. So as soon as that alert is hit, so if I was looking to sell here, as soon as price touches that 10 point, I enter the sell. So that's the 10 point entry. So the 10 point
Yeah.
entry, you're entering on impulse, or you can set a pending order.
Okay, I see. Yeah, I see exactly what you mean. So you wait for the 10 point move in the same direction, then you enter. And the
Mhm.
take profit, what would there be? I know you say,
So the
you know
10
when you
po-
say
the
so.
10 point the 10 point entry, since you're now waiting for a confirmation, you're going for a 1:2 because there's times price will keep shooting up like what it did here, like what these two scenarios here. There's times price will go to scenario 3. So since you're not waiting for a confluence, that's why you want to go for a multiple R. At the very least, 1:2 risk to reward. If you're gonna set
Okay.
break even, only set break even when you've achieved a 1:2, but go for a 1:2 risk to reward for
Yeah,
the
okay.
10
So
point entry.
okay. Just for example, like when you say the 1 to 2, where would that be? Just for
What do you mean? Your entry is at the 10 point, so that's your entry. So that's what your 1:2 is. So you're going for a 20, okay, 20 point stop loss, 40 points take profit for the 10 point entry,
okay. Okay, I
right?
see, I see.
20 point
And
stop loss, 40 points. Yeah, so it's based off of that 10
okay,
point
okay,
entry.
okay, okay. I got that. I don't know why I
Okay.
just did that.
Now, the second entry model is, or the second entry is the 5 second entry. The 5 second entry, you need the 10 point to be hit. Definitely. The 10 point is always the entry threshold. You need the 10 point to be hit. However, on the 5 second
Okay,
entry, that's why even when I'm trading live, I always enter the 10 point account first. So I'm always in the 10 point trade first. Now, the 5 second is that after, so let's assume here we had a 10 point, let's assume we were looking to sell US 30 and this one was our 10 point entry and I already entered the 10 point entry here. For the 5 second entry, you're waiting for a change of structure back to the direction you're anticipating for price to go. So for me, the change of structure is this crossover sell here, or is the crossover sell or buy, either a red X or green X. So if I was already in the 10 point entry here, my 5 second entry would be here after this crossover sell was printed.
okay. Yeah, this is the part that's a bit confusing. On the 10 second, you don't look for um.
No, it's not 10
You know,
second, it's 10 point.
yeah. No, what I mean is, you say you wait for that line. Is that the SAR line on the 5 second? You see what I mean? And then the crossover. You look for that
No,
cross
I
on that
only
line.
I only wait for it's the X. So I don't even care about the line. The X.
Okay,
So whether
okay,
it's
okay.
for red X if I'm selling, green X if I'm buying.
Oh, so what you do, um, this is just, I don't know why it's getting confusing, but the 5 second, um, so you look for the 10, uh, yeah. So what was it again? One more time. The X, the crossover.
The crossover buy or crossover sell.
Yeah. So in this case, it's the crossover sell.
Mhm.
Oh, uh, I've got the 10 second one, but I don't know why the 5 second one is confusing.
So the 5 second, all you're doing is, so the key thing here is, and don't think about it too deep. The key thing, the only thing to note is that you need price to come 10 points away from a level, 10 points past an SAR, past an EMA, past uh and past a pre-market high and low. So long as it hits that 10 point, you enter that trade. That's it,
Okay.
right?
Mhm.
Okay. If you are in the 10 point entry, then you wait for a change of structure. For me, I use the crossover buys and sells. You can use anything else that shows you a change of structure. I don't know. trend lines, whatever. But after you enter your 10-point trade, or after, if you don't want to enter the 10-point trade, that's fine. But after the 10-point threshold is reached, look for a change of structure on the 5-second time frame. Immediately you get a change of structure, enter that trade with a 1:1 risk to reward, 20 points stop loss, 20 points TP. That's it.
Okay. I see what you mean. Like, everything you're saying makes sense, but the problem is because I have done it once or a few times, and I know you've done it many times. You know how I was saying how you put the confluence and how you put the step one, step two. Every single part has to be written down. Do you get what I'm trying to say? When we look at it, we need to read it and memorize every bit. Like, how you said the 5 second, you wait for the 10, you look first for the 10 move in the direction, in the same direction. And then what's it called? What's the next? I don't already forget. Yes, you look for the 10-point move for the 5 second entry in the same direction. Then you, what's it called? Oh no, and then you have to look for which zone you're in. Yeah, so that's the second part. And then you said the change of structure, and then you look for the crossover. But you see, because all of this stuff isn't written, like it's hard to.
So that's why you need to. So for me, and anytime I've had to develop these strategies, you have to trade. Like there's no way around it. You can read as much as you want, you can do all of that, but you have to trade. Whether it's a
No,
demo account or whatnot. Like reading the
yeah,
even for me, there are days that I literally forget. There are days that I forget to look for order blocks. There are days, but the only way I'll know that I forgot to look at an order block is when it burns me. If I lose a trade and now I'm like, oh man,
yeah,
Michael, next time you gotta look at this. So one thing that I will say,
yeah,
you just by reading this, you're probably it's gonna take you more times than you need to
yeah,
learn this. You need to actually trade it. Either get a
yeah,
demo account or get a challenge. To be honest, that is the only way you'll be able to lock this in.
yeah. True. What I'm saying is, in the conferences, like right, like where you're showing, like if you wrote everything down on the like about what you should look on the 5 second, the 10 second, and the other thing is, yeah, like the 15-minute time frame, like you're on right now. Do you look at that first and
See,
then
you're
go?
lo- you're thinking about too many things. Do this. Get a demo challenge with me.
Mm,
No, not even a challenge. Get a demo account and trade with me on the live session. Show me your results after 1 month. And then now we can dig in to the trades that you
yeah,
take, because now if you start asking about 15-minute time frame, like yeah, like I check on the EMAs, like there's more,
because I'm not.
there's
Yeah,
there's 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 more to all of this. Like on the 15.
yeah,
Okay, like this hourly EMA here, if I don't have a demand zone on the hourly, on the 15-minute time frame, all my indicators are on the 15-minute time frame. That's just a preference of mine. But if I'm trying to sell here on this EMA and I don't find a supply zone on the 15-minute time frame, I will go to the time frame for that EMA. And if I find a supply zone, that's why like this buy right here that I'd marked up here, there was no demand zone on the 15-minute time frame for US 30, but there was a demand zone on the hourly time frame. So it's either or. So I'll take,
okay,
if I don't have a demand zone on the 15-minute time frame for a 15-minute EMA, I'm not going to any other time frame to look for that demand zone. But if I have a hourly EMA on my 15-minute time frame, and on that 15-minute time frame, there is no demand zone right there next to that hourly EMA, guess what? I'll know that, hey, this is also an hourly EMA as much as it's showing up on the 15-minute time frame. I'll go to the hourly time frame, and if I find a demand zone on the hourly time frame, I will actually look to take that trade on the 15-minute time frame. So as much as I can write all of that down, like it's not gonna do you any good. Like these are things you have to start trading in order then to say, okay, did I take this? Why did I take this trade? And then you start journaling. Like I can write all of that down, but trust me, it's not gonna do you any good. That I can tell you for free, because almost every actually for the EMAs, this is probably the only strategy I haven't had to adapt. And I'm not adapting to it because it's making me like, multiple tens of thousands a month. So I don't need to change anything. But every so often you will hear me correct or make a change to one of these confluences. Like for example, the let's talk about the order block confluence. So earlier on today, I said I was willing to take this sell, a sell that was next to this bullish order block. We had a sell opportunity here, and then I said, as much as we had I think it was a 15-minute bullish. Yeah, there's this 15-minute bullish order block that's wait, I think it was a 15-minute because all of these things have changed as time has gone. But we had a sell opportunity here, but then there was a bearish order block, like 50% of the profit. And I normally say, if you're selling, make sure there is no bullish order block anywhere between your TP and stop loss. There are times that I will take a sell, and there are times I'll take a sell and then there'll be a bullish order block like 60% or 70% of my stop loss. So that's against like what I've said on this confluence, but it also depends on what I'm also seeing around that area. Like for today, as much as we had a bullish order block somewhere near this zone, at the very top here, I think it was this trade. At the very top here, we had this 4-hour bearish order block. And then the bullish order block we had was a 15-minute bullish order block. So to me, a high time frame order block supersedes a low time frame order block. So these are some of the things that I can't write down. It's like there are times
Okay,
that these
I see
three
what you mean.
things are the yeah, there are times that these three things are the basic, but some of these things, unless you're trading with me and you're listening to my reasoning and actually looking at the chart and seeing that, like I can't write that down, if that makes sense.
Yeah, I know exactly what you're trying to say because it's one of those things that is just ever changing. You can't like control. You can't like, really put it down. I know what you're saying. What I mean is, I know exactly what you're trying to say. What's the thing is, the first step, for example, I know you explained it many times, but when you say the rejection of one of these three levels, does it have to be like what chart does it have to have? That's the other thing. You know what I'm trying to say?
I mean, okay, so if I ask you what chart do I check it on? What chart do you see here?
So it has to happen on the 15th.
It
Like
doesn't
one
have
of
to
those
happen on the 50. No, 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 no. It doesn't have. I just asked you a question. What chart do I have here right now?
15.
There you go. So if you want to the same results as I'm getting, then that's it. So just have it on the 15-minute time frame.
Oh, okay, I see. So it has
And
to happen.
no, 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 no. Take out the word has. I said if
Oh,
you want to have the same results as I have, that's it.
oh yeah. Okay,
And
that makes
with
sense.
this indicators, it doesn't matter what time frame you put them on. These indicators show you. That's why the EMAs have a time frame. That's why the SCRs have a time frame. It's just that like I can literally change this to 30 minutes. That's why I don't like talking about time frames. Like if I change this to the 30-minute, it's literally the same levels. If I
But
put
then,
this on the hourly, it doesn't change anything. The levels don't change.
but would the okay? So the levels won't change, but will the results change?
Why
Basically,
would they why
you see
would
what I'm
they
trying-
change? If the levels don't change, why would the results change?
because wouldn't price hit like at a different point? What I mean is like when price is at a low time, obviously you can see it actually hitting faster. If you see what I'm trying to, you
Mm-mm.
see, like it's a bit more. That's what I'm trying to. But it's
Okay.
all the same thing. Really.
No, it doesn't. It doesn't change anything. Like, okay, let's do this. Let's do. So if I change, so we are what? We're on the hourly time frame. So if I change to the daily time frame, all those levels should remain. All those
Yep,
levels
yep.
that I drew on the hourly time frame, they should remain. Sometimes they might be a little bit too far. especially with this EMAs. That's why for the SAR, I've had it's called a persistent line. So let's do this. You'll see, what's the best way to show this? Uh, yeah, you see like this 4-hour sell here. So the SARs, they are tied to the candle that put them in. So that's why you have these persistent lines that are dotted here. So, and you can see here for the EMAs that I haven't put that persistent setting on there. But you can see here, these three levels that were there on the hourly are still there. On the daily, for the daily here on the EMA, they wouldn't show because it has the persistent line. And the last time it got printed was all the way back here. So for this particular one, we might need to go lower. But you can see for the EMA that doesn't have that persistent fix, these three levels that I drew, if I go back to say the 10-minute, we should be able to see those those corresponding lines. Let's see where they are. I forget where the blue line. So the blue line is here. If you can see the blue line here, I think it's drawn maybe all the way. I don't know. But you can see these blue things right here. So those are those three
Yeah.
lines that I put them on there. So anyway, all that to say is that these indicators are not specific to a time frame, because
Yeah.
all these indicators are showing you, like, the way to read my indicators, I have a time frame, I have the strategy, and then I have whether it's been retested or not. So what this is telling you, this is a daily EMA one. This is an hourly EMA two. So if you go to those time frames, if you go to the hourly time frame, you will find EMA two to be here. So it's not dependent upon a time frame. Now, to a little bit in your direction for the answer to that question is, the only way something would change is, you remember how I was saying, if I'm looking to take an hourly entry, whether it can be an EMA or SAR, but if I'm looking to take an hourly SAR or EMA entry, and I don't have, let's say it's a buy, I don't have a level of demand on the 15-minute time frame, that I will go and look for that to see if there's a demand level on the time frame of that level, right? So that's the only way that would be affected if you change timeframes. Because if you now change to the 30-minute time frame, then you would need to, if you change to the 30-minute time frame, you would need then to look for the supply or demand levels at the 30-minute time frame now, and then now look for the supply and demand levels at the corresponding levels of the indicator. But your results shouldn't change. The only way they would change is if you go again, if you choose to put these indicators on the hourly time frame, look for supply levels, supply and demand levels on the hourly time frame, and then look for supply and demand levels on the corresponding times. And again, the only possible reason that I maybe leave these indicators on the 15-minute time frame is that, for me, I don't trade any time frame lower than the 15-minute time frame. So the 15-minute time frame is the lowest time frame that I trade. So I don't have to put my indicators on the hourly time frame, knowing that, okay, I now need to go back and look at the 15-minute time frame and look at the 30-minute time frame. So if I'm already on the 15-minute time frame, and most of the trades that I take are like sometimes rebounding on 15-minute levels, it's like, it's less back and forth for me.
So what's it? Yeah, for now, I think we just call it 24, 24. But I think it's 11, 25. But like however many days, like obviously when we're on the live, I'll just have to ask because right now things over time.
Yeah. So I think, going, and even for myself, every time I develop a new strategy, like, I normally give myself 2 weeks to kind of learn it, and I learn it in the live environment. So long as I've done my back testing, and whether it's the SCR rejection scalp, the first 2 weeks of me trading any new strategy, I lose a bunch of money. But I'm open to that because I'm learning, and that's how I learn, because I learned the hard way. And it's like, and that's for me, unfortunately, that's the only way I can learn. It's like to see my mistake and then to correct that. So as much as I can write all of this down, the only way anybody will learn exactly how I trade, other than just literally entering and exiting when I'm taking. If you guys want to learn and trade independent of myself, the only way is to actually either do a demo account and then take a chat or take a challenge. And then if you want, man, we can sit down at the end of the month and then recap each and every one of your trades and see, why did you take this? Why did you win this trade? And literally that's how you. So if for me I was trying
Yeah,
to learn from myself, I would literally get a demo. If I can't say maybe get a challenge, I would get a demo account. I would either take every trade that I'm taking, and then try to learn my best. And then maybe after 2 weeks, I'm like, hey, I'm still not understanding. I'm taking the same trades as you're taking, but every time I trade by myself, I find myself losing. And you're like, can we sit down for like 30? And I don't even charge for some of these things. Like I don't charge for, sitting down and going over my I don't charge for any of those. But at some point, I feel like I will eventually. But like that's how I would do. And that's why for me, it's like I don't understand how somebody wouldn't either be having the same results as me. I do understand how, because
mm,
there's a lot to trading. There's over leveraging. There's revenge trading. I do understand, but it's like I'm always here. Like if you guys ever need any guidance and you're like, oh man, I have this challenge. I have this demo. I'm not seeing the same results as you, but I'm trying to trade like you. Like, where am I going wrong? Like, I'll literally sit you down and we'll go over each one of those trades and see, is it maybe you not understanding the strategy? Are you over leveraging? Are you X and X and X and X?
yeah, bro, man. That's the only way to do it, man, because I think that's the only way you're gonna.
Yeah, I mean, for me, definitely, that's how I've learned. And like, I'll be honest with you guys, it is worth it. Like, eventually, it is worth it. Like, even last year, like when we back tested the SAR, because the rejection scalps, I just started them off this year. Last year, when I showed you that the back test I did, I literally did a back test for every day of the year for the SAR rejection scalp for Bitcoin, gold, and US 30 on the hourly time frame. And the combined profit for those four or those three strategies, mostly gold and US 30, was $50,000 for last year. And the rejection scalp is giving $50,000 in just 1 month. So, like, literally, when I tell you guys, you have to, even for me to be able to help you, you literally have to put in the work. You have to go back out there and show me proof that you back test. You have to go back out there and show me proof that you actually forward test and take the trades. Because, like, if you want to get to that level of maybe getting $50,000 in profit in 1 year and being able to do $50,000 in 1 month, like even for me, it's like it's still, I'm still in disbelief. But every time I look at my trade copy, I'm like, yo, you know 8,000 copied to 5 accounts, that's 40,000 in just 1 day. So actually, even
Yeah,
nowadays, that 50,000 that I was making in 1 year, like some days nowadays I'm able to do it in just 1 day, just because now I have that skill set. And now I'm copying to more challenges. I'm able to pass challenges quicker. So it's all about that. But other
yeah,
than that, so I really have to go. I really have to drop off
yeah.
tomorrow. And let me just give this disclaimer. If I can do a live session tomorrow, but if anybody wants to trade, I recommend you guys to lower your risk. I will. We'll see how that goes, because if we go to my journal here and I show you I think that one was in this one was in May. This day right here. This one was an FOMC day. So we started off with a win, um, came back to break even with this loss, and then from that time on, I had three back-to-back losses. And then I just called it a day. And this one were based off of the rejection scalps. So you can see this ones were EMA rejection scalps and SAR rejection scalps. So tomorrow during FOMC, it's a big red flag. So we'll see how we'll do it. But I'll either not trade at all and just observe how tomorrow goes, or if I do choose to trade, I'll definitely turn off my trade copier and only focus on trading my two main accounts. And even if I do choose to trade my main accounts, maybe I'll be doing 0.01 lots to just see. So tomorrow will be the deciding factor. If tomorrow there's a bunch of wins, then maybe I'll look to be trading FOMC from next month, maybe with half risk. If tomorrow has another bunch of big losses, I will just stay away from trading FOMC days. So we'll see. But if you do decide to take any trades tomorrow, just for you guys, just lower your risk, and then at the very least, let's just see how the markets move. And then
Okay.
Thursday will be no live session. It's a holiday, and then on Friday I'm actually traveling somewhere, so probably tomorrow will be the last live session of the week.
Okay, bro. Just one last thing. Just one. You know, like
Mhm.
how we do the live sessions every week, obviously. So whenever, obviously, when we're on, obviously, sometimes I'm not online on Friday. That's why I don't come. I think you really. Sometimes I come on the. Obviously, usually I'll just.
Mhm.
Whenever we're on, I'm gonna obviously now this strategy because you only started it in March. Was it March? I think it was March.
Yeah, March, end of March.
Yeah. So
Actually,
I don't know how long.
February, my bad. Actually, February. Last week of February is when I started. Yeah, rejection scalp. I actually started the rejection scalps in February, the last 2 weeks.
Yeah. So basically, from now, on, just we'll just have to keep
Yeah,
every
and
day.
normally for Fridays, I think only maybe 2 Fridays have been. Let's see. So for Fridays, we rarely get. So February, we didn't have any trades for Friday. March, we had some trades. I mean, the profit wasn't too big on Fridays. One trade here, three trades, two trades. April, I mean, April, we had one good Friday, but for a bunch of Fridays, we normally don't have too much trading.
Yeah. So we need to learn it properly.
Yeah. So anyway, it's just whenever, like you don't even have, if you Monday to actually, I think if you look at my stats here, actually, this is funny. Friday is my most profitable day for the rejection scalps. So Friday for the 5 second entry, Friday is my most profitable day, followed by Thursday. Tuesday is normally a good day as well. But even with these other days, they're still good days overall.
Mm. Because it wouldn't just make sense for us to just get, how you obviously know what you're doing. It wouldn't make sense to get the indicator or whatever and then just start doing it if you don't know what you
I mean, it
like.
depends.
Obviously,
I mean, I don't make any money from selling my indicators, so it's like
no,
I
no,
actually not a lot of people. If you're trading with
it's
me
not
on the
even
live
about.
session,
It's not even about
mm,
that. I don't care about. I'll just pay it. I don't really mind. If you're getting the same results as you, uh, $90 or whatever is nothing. That's just you're making like 8K a day. Now, $90 is nothing.
yeah, and
You
even take out like even 8K is on the higher end. It's like if just yeah,
Even
you're
if you
right.
make
Like
4K,
you can do 8K, but even if you want to cut, even if you want to risk 0.25% per trade and only be taking the
up
10-point entries with me, like that is still what, maybe sometimes 2K a day or something. So still a lot of money.
exactly.
Yeah.
And then yeah, and then eventually once you get to that level, because it's gonna take a lot of time, or it probably will take me a lot of time. Um, whatever the case is, that's not for you to learn. You need to, we all know we need to put money in to make money. So, yeah,
Yeah,
that's all I have
that's
to say.
true. But yeah,
Mm.
but anyway, yeah, I really have to go. I have some
All right.
other place. But yeah. So I'll see you guys tomorrow. Yeah, but this was a good session. But yeah, you're right. It's if you have that perspective, perspective is everything. So long as you know that this is the potential. And again, yeah, you're actually even the one that just made me look back. So the statistics we have for the rejection scalps are from the month of February. So between February to we're in June, right? We're
Yeah.
halfway through June. So February, March, April, May, June. So in 4 months, $85,800 for the 5 second entry account. And then for the 10-point entry account, about 50,000. So give or take in 4 months, $130,000. So if you just had not even this is not even copying my accounts, right? So you can do the number. So this is only on two accounts, not, we're not even considering the copying accounts. But in just 2 months, and at no point would you have blown an account just by even risking 1%. So in 4 months, about $130,000 across two 200K accounts. So, and then now do the math about if you're copying this to five accounts. So even though let's assume we were blowing accounts, like the risk to reward is so high, which we are not. So let's assume even we took
Mm.
challenges and we blew accounts, right? We blew even $5,000 in 4 months, but in those 4 months we did 140,000 in profit. It's like the risk to reward is like so high. So and now that we are not even blowing accounts, you take maybe 2 months, you give yourself 2 months to pass a challenge, and now you start banking with me once you're funded. It's like, yeah.
This is like, yeah, these strategies are just sticky. You just unlock. If you can unlock it, so
Yep. But
yeah.
anyway, I'll see you
All
guys
right.
tomorrow. Talk to you guys later.